Hi and welcome to the Market Alert for Friday the 4th of March 2022. So bonds and bullion bid as stocks and crude and crypto crumble. And then we've got this news item: second Cold War is here and supply chains will be the front lines. We are about to experience the most dramatic and unpredictable supply chain map we have experienced since World War II. Couldn't disagree with that actually, given what's with all the sanctions, everything. Oil slides on speculation Iran nuclear deal will be signed. Yeah, we dropped from $118 down to 110, I think it was. It was a massive drop, and then it's rallied back a bit. Again, this could have been just pumped out to get the market to move lower, take the heat out of it, which again is not surprising. We've seen that many times over the years. ISM services slumped to 12-month low. The bit that's important in this is this imminent wage growth spiral means higher inflation as the great resignation is real. Severe labour shortages are expected well into 2022. Faster wage growth is expected to lead to increased inflation. Of course it is. And then talking of inflation, this one was put out yesterday on the Sky News website. The inflation index signalling a 1970 style leap in prices is looming large. It's already started. It's not looming. It's already started. And yesterday, if you saw the market move sharply to the upside, it was because of this. This was around lunchtime. Russian forces lay siege to Ukrainian seaport as, get this, second round of ceasefire talks. Well, as I mentioned in the market alert at the outset of this war, the day that they announce when there is a ceasefire, the charts will be vertical, based upon yesterday's move on speculation, again, of a second round of talks, moved the market up 150 points, but failed to hold, as we'll see shortly. What have we got news today? There's no Powell or anything, but it's the big one, of course. We've got the non-farm payroll at 1:30, which seems to be overshadowed. Obviously, everything is at the moment with Russia, Ukraine. But this one, the market will be taking note of, so it could be fairly quietish this morning. So there are the numbers. Watch out at 1:30. Gold-silver ratio is moving back up just a bit. As soon as it loads, it's on its way. Drum roll. There we go. Yeah, so you can see moving back to the upside. Gold's holding steady. Silver's coming under pressure because the dollar is moving to the upside. Okay, let's see if we can find the Dow. We'll start off with that one. That's the DAX. So this must be the Dow. What's interesting about the Dow is how sideways it's been this week compared to the DAX, which has gone through the recent low. That this low that we see in the Dow, the DAX has gone through this last week's low. So very strong with the Dow, but then it's not actually like the DAX in the sense that it's not based in Europe. It's outside of it, and it's more interested in waiting to see what Powell's going to do with interest rates on the 16th of March, as I suspect that the broader market is, but it's not tied into the war as much as the German DAX is obviously being based in Europe. So that's just my simplistic look at things, but it seems to be holding up really well. So anyway, we're down on the overnight and we traded down to 89% and we've bounced straight off this and moved up a bit. Doesn't mean to say it's going to continue, but there is a chance that it will, having done the damage overnight, which you can see here. Market dropping sharply. We've got the demand coming in. We'd already been to oversold, and the market trading back. We've had the first pullback, and now we're stuck at the 200 MA and the low of yesterday, which is a very important area, which I talk about often. So prices will need to bounce off this area in order to move back to the upside. But at the moment, we're heading into oversold. So we could see a bit of a pullback before any move to the upside. And any move failing to the upside, we'll see the prices continue to the downside there. Let's have a look at the DAX. And yesterday, very heavy day. Market moving lower, taking out the low. And overnight also trading down to the low that we've got here. It's easier to see this on the weekly chart. And again, you can see how much weaker this is because this is the low that was taken out during the last few days, whereas the Dow is up here. This has been pummeled to the downside, so a bit more weakness in the DAX. Markets gap lower, and we've retested twice in the oversold area at the S2 as well, where the market's managed to bounce off, but not holding a great deal at the moment. Let's just have a look, see where we are. So we're at 62, came up to the golden ratio at 62, and is now trying to move back to the downside as well, showing a bit of weakness there. Again, doesn't mean to say it won't, just needs to drive through to head back to these fibs, which I've drawn in from yesterday's high down to project back, because in the daily chart I can't draw on today's low because it's already in progress. It could go lower, so there's no fibs on this. What I've done is use yesterday's high in the daily, drawn in, and then projected back up to 89, just in case the market comes back up to that level, which it's starting to look a bit bullish at the moment in the smaller time frames. As I look across to the other screen, in the 5-minute chart for yesterday, I just want to show you the action here. In the pre-market we moved up. You can see that actually in the pre-market we actually sold off at 7 o'clock. We came here and then moved down to the DP. We had the crossovers, which you can see there. We've got the volume coming in. We're oversold. Market opens and trades up to, again, you can see there, we've got 89% or 78%, and also from here back to here as well. Crossover, overbought, turns red, sells off, and the market then is oversold. Market comes back to 78% and then trades back up to the DP, where this time it finds resistance, as we sold through this on the previous occasion. The market then moves lower, again we're oversold, and the market then puts in the retracement. We've got the crossover in the stochastics, and then the market starts to make its way up to the 50 bar moving average, and you'll see there that once we hit this, again we were overbought, we moved down, and again we've got a retracement in here as well before moving back to the upside once more as well with divergence. You can see the pattern, it's so repeatable. So the market moves back up to the DP, has a breather, doesn't close below the 20 bar moving average, comes back on the stochastics, we get the demand, they buy the market, and then we have this move to the upside, and this is where the second round of ceasefire talks was supposed to come in. But look what happened, the market did what it needed to do, and then it was discovered it was complete BS, and again oversold, crossover in stochastics, crossover of the BRN, red parabolic red, and then all the way down to yesterday's low, which you can see there highlighted low, and it just came all the way back down until we ended the session with the market then trading sideways. Bit of a bounce back there, and then following the Dow for the night early evening session late on till the close at 9 p.m. But overnight you can see we've gapped down again, we're oversold here. Demand, we've got the demand there, we've got divergence, and then we see the market trading back to the 50 bar moving average, overbought, crossover, and then retracement, and then moving back down. We've got some divergence here where the market was starting to show support. We've also got support to the left. Cluster of volume. I don't think there's any demand down there. Let me just have a look. Yes, we have got demand. There's a D there. A couple of Ds priming the move. And then market sideways, let's say with this volume here, the momentum already shifting back up, oversold, market back down to the S2, crossover in stochastics, and then the market's been moving to the upside and is now trying to move to the upside. So from this high to this low, you'll see we're at 62 at the moment. The market needs to take this out if it's to get back to the S1, and its goal is going to be to the low, where it will find resistance with the 5 bar moving average there as well. I'm going to skip the currencies this morning. They're just sideways in the daily chart, and I'm already 10 minutes into the alert. So I'm going to go straight to the metals and just have a quick look what's going on here. The silver is under pressure. I'm expecting this to be pulling back from where we are. So let me just draw this in. 38 is going to be the first stopping point. Also, it's going to be affected by the non-farm payroll figures as well, out at 130. But again, back to the 200 moving average is the likely place for this to trade back to, as it's moved so far so fast. And like I say, the main reason is this. Find the dollar. You'll see that it's moved significantly higher. And silver's done well to actually move higher with the dollar, because obviously they're inversely related. But it's done well to actually do this, but it's still continuing to move to the upside. And also this contract expires a week today, I think, if I recall, into March. But it's not, it's the third week, but I think it's the second week of March for the futures on the US dollar. Just going back to silver, you can see the choppy there. We also had the market moving down yesterday as well. Traded down to the S1 and the psychological level of $30, oversold. Trading sideways and then has moved up a bit. So we had a decent retracement, but at the moment the market's heading for that 25 and yesterday's low. That's its first downside target should it continue. Gold also looking weakish as well from having moved up. It's going to take a moment to get through that $2,000 level for sure, because the dollar is moving to the upside as well. There's the daily. You can see where we're at with this one as well. So 1974, we need to get up to the $2,000 level for this market to continue to move. And crude oil, as you can see from yesterday, the market coming back. Let me just widen this out so you can see more of it. Yesterday's range, you've got the high 119 down to 109. I know it was around a $10 swing yesterday for crude oil, but finding some support there at the moment. And of course that again, the news item talking of a deal, hopefully not done, hopefully being done with Iran with regards to nuclear. So I don't know whether they're using that for energy. I suspect so, given the news report, but we'll have to wait and see. But I think it was just a way of taking the heat out of the market, to be honest with you. Okay, that will do it for this one. We're at the weekend, so have a great weekend. Don't forget the non-farm payrolls at 1:30. And let's see what the market has in store today, see if it's as good as yesterday. As ever, thanks for watching. See you in the next one.